Welcome to The Explainer. I'm so glad you're here. Look, if you've ever walked out of a massive warehouse with a giant cart full of bulk paper towels, a rotisserie chicken, and, I don't know, a new television, you've probably wondered how the business behind it all actually works. Today, we're setting out to decode a massive retail mystery. We're going to look at the data, the underlying strategy, and the incredible structural advantages of Costco wholesale. Let's get right into it.
So here's the ultimate retail paradox. Costco is famous for capping its price markups. That basically means they make practically zero actual profit on the items you throw in your cart. Yet, if we look at a recent financial analysis of their early 2026 fiscal year, they somehow generated over $5 billion in operating income in just 24 weeks. $5 billion. Okay, let's dive into this and figure out exactly how they pull that off. Now, to really understand their financials, we first have to grasp the sheer physical scale of their operations. They've got an expanding global footprint of 914 warehouses spread out across 14 different countries. We aren't just talking about a local domestic grocery chain here. This is a high-volume, international logistics machine that absolutely relies on massive physical spaces to move goods as fast as possible. And those 914 warehouses, well, they serve a staggering 145.2 million total cardholders worldwide. I mean, to put that into perspective, that's larger than the populations of a lot of major countries. That massive number really emphasizes that Costco is way less of a traditional store where anyone can just walk in off the street and more of an exclusive, massive club. Section 1. The Low-Margin Retail Paradox. Let's start peeling back the layers of this giant onion, starting with what we can all see, how Costco actually sells its goods, and honestly, why their approach totally defies standard industry logic. You see, while traditional retail relies on offering a huge variety of items with high profit margins, Costco's strategy is entirely about volume and speed. They carry less than 4,000 active stock-keeping units, or SKUs, per warehouse. That is a tiny fraction of what a typical broadline retailer carries. By limiting your choices to fast-selling items in huge bulk sizes, they achieve crazy fast inventory turnover. In fact, they move products so fast that they often sell the inventory before they even have to pay their suppliers for it. It's absolutely brilliant. Section 2. The Membership Profit Engine. All right, moving from the visible retail floor to the hidden financial engine of the company. This is where the real money is made, and honestly, this is the big aha moment. Consider the first 24 weeks of their 2026 fiscal year. Despite selling well over $100 billion worth of goods, their operating income from actual merchandise sales was $2.4 billion. But listen to this. Membership fees alone brought in $2.68 billion. Since it cost the company practically nothing to collect that $65 annual fee, it is essentially pure profit. It literally out-earns their retail merchandise sales. Mind-blowing, right? Let's break down that membership base. They've got 81 million total paid members, but I want you to pay close attention to the 38.7 million executive members. These folks pay double the standard fee to earn a 2% reward on their purchases. Because they're highly incentivized to shop more to maximize that reward, this specific tier, which is actually less than half of the total membership base, drives a whopping 73.6% of Costco's worldwide net sales. But, a membership model only really works if people actually keep coming back. And their member renewal rate in the US and Canada sits at 92.3%. That is just incredibly high for any subscription service. It proves that the core value proposition works perfectly. Members easily save way more than the cost of the fee, which just keeps this recurring revenue engine running incredibly smoothly year after year. Section 3. The Kirkland Signature Moat. Okay, so we know the membership fee is the ultimate profit engine, but how do they guarantee the value that keeps people paying it in the first place? Well, that brings us to their absolute secret weapon, their private label, Kirkland Signature. It acts as a massive structural advantage. Now, before we get into the numbers, let's just quickly define what an economic moat is. It's basically a structural advantage that protects a business from competitors and gives it serious leverage over supplier pricing. For Costco, Kirkland Signature is so much more than just some generic store brand. It's a meticulously crafted economic moat. Get this, in fiscal year 2025, the Kirkland Signature brand alone generated $90 billion in annual sales. Just to grasp the sheer magnitude of that, Kirkland represents roughly a third of Costco's total $270 billion in merchandise sales. That makes the single in-house label larger than many of the most well-known global consumer brands out there. And this perfectly illustrates why Kirkland is so incredibly vital to their success. It isn't just some cheap budget alternative. It matches and often completely exceeds national brand quality. This creates deep, deep customer loyalty, where members just naturally reach for the Kirkland item by default. Plus, because they control it entirely, it carries slightly higher margins. But most importantly, it gives Costco immense negotiating leverage. If a national supplier tries to raise their prices aggressively, Costco can just expand the Kirkland presence in that specific category, which essentially forces suppliers to keep their prices low.
Section 4. Taking care of employees. Let's peel back yet another layer. We've talked a lot about products and profits, but we absolutely have to look at the human capital side of the business. How exactly does workforce management impact these highly productive warehouses? Well, take care of our employees is literally a direct quote from Costco's Code of Ethics. Now, it's super easy for a massive corporation to just slap that on a break room poster, but the data shows this ethos really isn't just talk. Costco fundamentally views taking care of their employees as a non-negotiable prerequisite to their ultimate goal, which is taking care of their members. And you can see the direct result of that ethos. At the end of 2025, their average hourly rate for employees in the U.S. was approximately $32 per hour. That is well above standard minimum wages. In return, their employee retention rate for folks who have been there over a year is 94%. 94%! So the crucial takeaway here is this. By offering highly competitive wages and focusing on building actual careers rather than just temporary jobs, Costco creates a fiercely loyal and highly experienced workforce. And that translates directly into unmatched operational efficiency on the warehouse floor. Section 5. Global expansion and risks. For our final section, we need to take a really balanced, impartial look at the road ahead. We'll explore how they're growing this model well beyond their North American stronghold, and also touch on some potential vulnerabilities they might face. Costco is proving right now that its model isn't just an American phenomenon. They're successfully transplanting this exact same warehouse model overseas. Today, they operate 285 warehouses outside of the US, establishing major footholds in markets like Mexico, Japan, the UK, Korea, and Australia. However, despite their massive scale and incredible efficiency, they certainly aren't immune to global pressures. Their annual report clearly outlines a few significant risks. Because of their ultra-rapid inventory turnover, they are highly vulnerable to any supply chain and logistics disruptions. They also rely heavily on complex IT systems, meaning they face the exact same cybersecurity threats as any modern enterprise. On top of that, extreme weather can heavily impact the supply and pricing of commodities, especially food, while constantly changing international regulations and tariffs always threaten to raise the costs of the goods they import. Which leaves us with this final thought. We've seen how a seemingly simple warehouse leverages a $65 membership fee to generate billions in pure profit, uses a private label to absolutely dominate suppliers, and pays its workers top dollar to ensure peak operational efficiency. It really makes you wonder, as Costco continues to expand its global footprint, will other traditional retailers be forced to completely adapt to this layered, unconventional strategy just to survive? Well, thank you so much for joining me for this explainer. I really hope it helped decode the fascinating mechanics operating behind those giant warehouse doors. Keep learning, and I'll see you next time.